So for today's topic, I'd like to go over Glassnode's new weekly newsletter. Glassnode has a fantastic weekly newsletter called This Week on Chain. And I really look forward to reading this newsletter every single week because it is just great to read from, quants. It's great to read from people doing, probabilistic analysis on the markets who are looking at this on-chain data and analyzing this. Because again, this is a type of data that we just do not have in traditional markets, and it is so rich and it can inform our decisions so well as traders and investors that it's just really important. And I look forward to this newsletter every week, so I want to go over it because this one's quite interesting, and this one's called "Moving Out on the Risk Curve." All right, and of course, Glassnode has some really cool on-chain indicators that they can utilize. Keep, of course, with the caveat that 99% of metrics are useless unless you learn how to use them correctly. There's nothing that can accurately predict the future 100%. Again, we deal in probabilities just like quantum mechanics. All right. So in this article, Glassnode is going to be exploring how capital is starting to rotate through asset classes by tracking asset performance, total value locked, and trade volume on decentralized exchanges. Basically, this is going to be an alt season publication. All right, so we're going to be kind of looking at on-chain, what are the volume signatures, what are the investor behaviors, and how are these assets growing that would indicate that altcoin season is going to continue, all right, or restart, all right, moving out on the risk curve this week on chain. All right, so the executive summary here is since October of last year, Glassnode's alt season momentum indicator has flagged growing appetite from investors to move capital further out on the risk curve. What does that mean, further out on the risk curve? Moving capital further out on the risk curve means diversifying your initial cryptocurrency holdings that would be something more stable like Bitcoin, Ethereum, and stablecoins, for example, and beginning to diversify those holdings to sell profits from Bitcoin and use those profits to invest in more alternative assets and riskier assets, things like Solana or Arbitrum or Optimism. And then, of course, you can extend that even further. For example, individuals cycling profits out of those assets and moving them into riskier DeFi positions, for example. All right. Whilst Bitcoin dominance does remain significant, there are early signs of more capital rotation into the Ethereum, Solana, Polkadot, and Cosmos ecosystems. All right. And by investigating Uniswap liquidity pools, we can see that most capital does remain in the most mature assets, the coins that have been around the longest. And whilst TVL is moving out on the risk curve, trade volume has been slower to follow. All right. What I think that means is that we are seeing a big influx of kind of new trade volume due to the ETFs and due to, of course, just price being up and more normies wanting to come in and trade cryptocurrency. And even though we're seeing investments start to branch out on the risk curve, we're starting to see investors move that kind of TVL out. Trading volume, as far as located on decentralized exchanges, has been slower to follow, which again lets us know that we're still extremely early, guys. Things are even as hot as things are, things can get a lot hotter. All right. So anticipating alt season. All right. With the new spot coin, with the new spot Bitcoin ETFs gaining momentum, a bull market in the digital asset space is arguably in play. With this backdrop, we'll continue exploring the question of capital rotation. This is something they covered in a previous newsletter as well. In this edition, we will focus on how assets are performing further out on the risk curve. All right. The goal is to assess how capital rotates and flows into the altcoin markets. All right. Again, understanding of flow dynamics, market psychology is going to be a very helpful tool with discretionary trading, with discretionary investing. And then again, they of course have their alt season indicator as a macro indicator. This indicator assesses whether positive momentum is building within the total altcoin cap alongside continuous capital inflows into BTC, Ethereum, and stablecoins. So what they want to see is not only do they want to see the altcoin season market capital, the alt season market capitalization rising, right? Total 3. And of course, we can look at total 3 very easily. Total 3 lives over here. Okay. You can see total 3 is hovering north of $500 billion, $536.95 billion as of the time of recording. Okay. This alt season indicator has signaled positive momentum since October of last year, with a brief pause during the sell the news event during the Bitcoin after the Bitcoin ETFs went live. It re-triggered on the 4th of February. So Glassnode's alt season indicator is firing. All right, so here we can see, we'll just zoom in for a little bit more granularity here. here is their alt season indicator. And we are tracking, let's see, the gray line is BTC price, of course. Things that they are looking for, all the components that are in this indicator. We're looking at true USD circulating supply, BTC relative market cap, BTC realized cap, USDT circulating supply, Bitcoin dominance, Ethereum relative market cap, Ethereum realized cap. So again, they weren't lying when they're saying not only do they want to see the alt cap right here, which is the primary indication that they're looking for. We seem to have lost our. No. Not only are they looking at the alt cap, right, which is going to be the dark blue line here, all right, and they're looking. So this is the 30-day moving average of altcoin capitalization, and of course they're also looking, contrasting that with the 7-day moving average of altcoin capitalization, which is of course the purple line. So again, we're just looking for the 7-day growth of market capitalization to overtake the 30-day growth of altcoin capitalization. So not a leading indicator, a lagging indicator for sure, but we can see here that it is just tracking. Notice how it kicks in kind of after prices start to kick off here a little bit, not before. So it's a little bit of a lagging indicator, but lagging indicators are good. All right, moving average crossovers can signal very powerful signals. Just most people are a little scared to take them, and that's totally fine. But we can see that every time the 7-day moving average of altcoin capitalization overtakes the 30-day moving average of altcoin capitalization, basically the altcoin season indicator does fire. Now, of course, you will need an advanced subscription to Glassnode to access these M7 metrics, right? But we can basically make a simple bastardized version of this with just TradingView, all right? With just TradingView, you can just pull up Total 3 and you can throw on our free to use CC EMA indicator. So we can just modify these. All right. We're going to take these moving averages off. We're not interested. And we're just going to make a 7-day moving average, 7-day SMA. And we're going to be using a 30-day SMA. All right. Right here. So again, we're not going to be getting the kind of the stablecoin metrics or flow like that. But essentially, here is our alt season indicator. All right, our alt season indicator. Very simple, slightly bastardized version of the alt season indicator. All right, let's carry on. So here's our alt season indicator, guys. Again, is an overbought indicator going to be really helpful here? No, because again, overbought is like, oh, we're constantly looking for the rally to end, right? And that's not trend following strategy. When you're a trend following trader, here's the thing, guys, and this is very important. Trend following traders, we live for this movement. Okay. All right. Which means we don't care about selling the top. We care about selling here because we got in here. That is the point, right? We are patient. We wait long periods of time for a good setup to develop. We have the cojones to continue to hold through all this volatility. We add on dips when the odds are in our favor. And you only need a few nice, beautiful trades like this to really, to make the pursuit of trading worth it. All right. The cryptocurrency market trends very strongly. It is the most logical trading strategy to use because most retail traders who try to trade like sophisticated traders get chopped up and wiped out. And that's not, there's a lot better ways to trade in my experience and in my opinion. Okay. So getting back into our article here. All right. So we do know that the Glassnode's alt season indicator has been firing. We know that they are looking at significantly more metrics than, of course, we are with just our simple altcoin cap token, though. Now, in terms of market cap dominance, Bitcoin does continue to lead. All right, here is kind of a pie chart of market cap dominance right now. Bitcoin does lead at 52.4%. We can see that altcoins' relative market capitalization is sitting around 23.6%. Ethereum's relative market capitalization is sitting at 17%, with stablecoins coming in at 7% market capitalization. Remember, of course, we have talked ad nauseum. There is a great system that you guys can utilize, which is USDT dominance. All right. And actually, I would be quite interested to see kind of how that indicator works here as well. That's pretty nice. Obviously, when we're dealing with moving averages, the issue with moving average strategies is getting chopped up in consolidation, right? Where your moving averages can be kind of crossing over each other very wildly. But just looking at USDT dominance, of course, see, here's that kind of nightmare scenario, right? Where you have consolidation and you're just getting continually chopped up, getting continually chopped up, getting continually chopped up. But when we get these nice, beautiful trends, it kind of foretells, should we be broadly risk on? Should we be broadly risk off? All right. Should we be broadly risk on? Should we be broadly risk off? All right. And again, we can see here from USDT dominance, we were trading in this range for a long time, since 2022, basically. And every time USDT dominance got down here, it was an indication to exit the markets, to go risk off, because USDT dominance would then rise to resistance, where you would then go risk on for the decline, go risk off for the ascent, go risk on for the decline, go risk off for the ascent, right? We did this over and over and over and over again. And then back in November, we actually broke down, back tested as resistance, and broke down again. So it's just been risk off this entire time. Now we have made a lower low, and we are looking to see if USDT dominance is going to just have a little kind of movement like the one that we just had, or are we kind of in the middle of a trend? All right. So again, we just wait, chill, relax, everything's fine. In terms of actual price performance, Bitcoin and Ethereum are leading the pack. We're up 17.6% and 18.2% respectively. All right. But on the other hand, the aggregate altcoin market capitalization has not experienced the same performance, with year-to-date growth being less than half of the two majors, meaning our alt. So again, this chart just lays it very clear. Again, if we look at our overall performance of altcoins during this cycle, we can see that this rally has been very much Ethereum and Bitcoin driven. All right. Bitcoin being up 17.6% year to date, Ethereum up 18.2%, and altcoins only 8.1%. So we can see altcoins significantly lagging behind our Bitcoin. So we really haven't had this, we really haven't had altcoin season per se. All right. Of course, altcoins have been moving up, doing fantastic, but kind of that cycle of the market where we see Bitcoin stagnate, where we see Ethereum stagnate, and things just, well, Bitcoin really stagnate. Ethereum tends to go up quite well. Yeah, we haven't seen that. We haven't seen this. What do I think? Bitcoin has skyrocketed in the last month. I mean, listen, a variety of reasons, but at the end of the day, there's more buyers than sellers. All right. We're in a bullish trend. Things are hot. These things just kind of pile on top of one another. I'm not a big believer in narratives or reasons, right? Because you can just kind of drive yourself crazy. I'm not a conspiratorial thinker. It's because we're in a bull market, right? And volatility. I mean, there's a myriad technical reasons we could go over why. But again, those are probabilities. Okay. Another lens to track performance is using the realized cap for each sector. So we're going to aggregate the cost basis value of all coins transferred on chain. It's a beautiful way to do this. From this perspective, we can better assess the movement of capital within digital asset markets. All right. So Bitcoin again is leading here, almost $20 billion in capital inflows per month at present. Of course, that number is quite nice. Keep in mind that this number does exceed the actual USD value of Bitcoin being mined per day. We do have a bit of a supply squeeze. I mean, that is another important reason. That's one of the other important narratives or kind of reasons that's laid out for why Bitcoin has had this explosive growth, because of the ETFs. The ETFs are spot. And that means that when you go, if you open up E-Trade, if you open up Fidelity and you go and buy your Bitcoin ETF, the custodian of the Bitcoin ETF has to purchase spot Bitcoin to balance the portfolio of the ETF, of the issuer. So this is a big reason. Yeah, and that demand for spot Bitcoin is currently exceeding the amount of Bitcoin that's being produced on a daily basis. So you have supply side dynamics. Ethereum inflows are lagging behind Bitcoin. So investors, let's see, are suggesting investors look for confidence and confirmation that digital asset markets are growing, blah, 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 blah. In the 2021 cycle, the peak influx of new capital into BTC occurred 20 days before the peak influx into Ethereum. So basically saying that we saw the blow off top 20 days before the blow off top for Ethereum. Okay. And altcoins tend to see capital flows with a similar lag after Ethereum sees strength, with a duration of 46 days in mid 2021 and 14 days in late 2021. So it is laying out this cycle of explosive tops where we see Bitcoin peak first, and then about 20 days later, Ethereum peaks first, and then about 46 days in 2021. So again, about 5 weeks in 2021 and about 2 weeks in late 2021, we saw altcoins peak as well. This is also not too dissimilar from the 2018 bull market, where we saw Bitcoin peak first and then sell off, and then we saw Ethereum peak and then kind of sell off, and then altcoins absolutely exploded in their last gasp. And 2021 was not dissimilar. 2021 was quite the exact same. Something happened. Oh, what's up, dude? Oh, yes to crypto with the 5 gifted. With the 5 gifted. What? Why is he gifted 5 gifted? What is he doing? Why is this happening? As I said, Bitcoin's leading the rally. We're seeing $20 billion in capital inflows per month. And we talked about this difference of how cycles top, with Bitcoin topping first with capital inflows and then Ethereum topping about 20 days later. At least back in the 21 cycle, we topped 21 days later. And then altcoins topping anywhere from 5 weeks to 2 weeks later. All right. And all of this is important because it lets you know the flywheel of diversifying risk in the cryptocurrency markets, right? With this sentence. It is evident that capital moves down the risk curve into altcoins at a slower pace compared to the rotation between the two major cryptocurrencies, a trend which appears to be in play once again. Meaning that the velocity of diversification from Bitcoin into Ethereum is significantly faster than the diversification from either of those two assets into altcoins, right? And we can see the market realized value net capital change. Again, you can see absolutely Bitcoin and Ethereum leading the rally. Bitcoin at 1,002%, relative capital change, 964% for Ethereum. And we can see, what is this? Stable coins and altcoins lagging. Whoa, that's too much. We can see stable coins and altcoins lagging behind here at 837% and 169% respectively. All right, so we have signs of capital flows into the two majors, right? We know the capital is flowing into Bitcoin and Ethereum. Next question is, how does this capital flow out into altcoins over time? Like, what is the velocity? What is the rotation? What patterns can we determine? Glassnode wants to examine the top 5 tokens of select ecosystems: Ethereum, Cosmos, Polkadot, and Solana, to assess which are attracting the most investor interest. What are the chains that are attracting the most investor interest? How is the capital flowing? All right. And we're going to do that by Glassnode is going to do that by comparing the aggregate market cap of the top 5 tokens in each ecosystem. All right. Let's see here. Over the last 18 months, Solana has exhibited relatively high volatility, with upside performance being a standout. Polkadot and Cosmos have similar volatility, but with the Polkadot ecosystem outperforming the latter. This is kind of why you guys have heard me be very dismissive about Polkadot over this last year, because I'm just very disappointed with their team. Their marketing team sucks. Their initiatives team sucks. Like and they're not growing, right? Okay. So here, we can see the volatility and we can see the overperformance of Solana relative to Polkadot and Cosmos. All right. Within the Ethereum ecosystem. So this is important, right? These words are important coming from Glassnode because we've spent a lot of time going over what are the right narratives to follow, right? Less token selection and more narrative selection, right? Because being on point, having the right narrative is often more important than the proper token selection, right? If you're broadly diversified in the right narrative, you will typically do quite well. If you kind of over agonize over token selection, you can really kind of retard your progress quite a bit. And they're saying here within the Ethereum ecosystem, they can identify 3 major sectors: DeFi, GameFi, and staking. All right. So right there, very interesting. Glassnode basically tells you what are the 3 most critical sectors, what are the 3 most critical narratives to be looking for. That's GameFi, right? I've kind of been proselytizing and evangelizing the GameFi narrative for quite a while. GameFi is a large portion of my portfolio for 2024. I've gone over that quite a few times. Staking, I am the restaking narrative, like Eigenlayer, Altlayer, for example. That is a component of my portfolio. And of course, DeFi, there I'm broadly targeting various different assets. DeFi is not necessarily that's too broad of a category for me, honestly. But the restaking narrative, real world assets, those are narratives that I'm targeting, right? Since the beginning of the year, all 3 sectors have seen inflows. However, the DeFi and GameFi sectors have seen relatively large capital outflows throughout 2022 and 2023. All right. This year, however, this year has been a reversal in the GameFi sector. So we were seeing lots of money. Basically, they're saying that lots of money was flowing out of the GameFi sector in 2020, 2023. But now 2024, as we've kicked off, we've had 2 months now of 2024. That is now reversed, and we are seeing a lot of capital flow into GameFi. With notable inflows started in October, which coincides with the point when our altcoin season indicator triggered. All right. Okay. So to drill down a little bit more, Glassnode is going to dive into the Uniswap liquidity pools. They're going to be diving into the Uniswap liquidity pools. Since altcoins are often traded by more crypto native traders via decentralized exchanges, activity on the most established DEXs can serve as a proxy for trends in altcoin trading. All right. Altcoin trading interest was very low during the 2022 bear market, but it started to increase in mid 2023, driven largely by a bust of meme coin mania. All right. So, I mean, kind of the way I'm interpreting this is that proper alt season has not really started. Meme coins have kind of kicked it off, and we're seeing that interest in altcoins pick back up, but nothing that we're seeing. Currently altcoin trading accounts for nearly 12% of Uniswap trade volume, approaching the 17.4% peak seen during the last bull market. In comparison, trading for wrapped Bitcoin and wrapped Ethereum makes up 47%, and stablecoins make up 40% of trade volumes. Very interesting. Honestly, I didn't know that before I read that metric. I think that you would generally assume, that the majority, almost all trading on Uniswap would be altcoin trading, but that's actually not the case. It's only 12%. The majority of trading on Uniswap is going to be stablecoins, wrapped Bitcoin, and wrapped Ethereum, which is very interesting. All right. Yeah, here we go. We can just kind of see this volume by token type kind of increase. Here we have stable coins are the light blue, wrapped Ethereum and wrapped Bitcoin are the dark blue here. And then we can see altcoins accounting for a significantly lower portion of the volume up here in the pink/purple. And we can see here is roughly around May and June of 2023. We kind of have this first burst of meme coin mania. And then again in August and September, we get another burst of this kind of meme coin mania. And overall levels, listen, altcoin trading is up, right? We can see altcoin trading is up. We can see this trend very nicely right here. But we haven't really had these big spikes that we've had. So again, I think it's pretty positive, actually. All right. So this is interesting. Liquidity providers on Uniswap tend to closely monitor the markets. So by analyzing the distribution of liquidity across pools, this can give us an indication for prevailing market trends. All right. So examining the composition of TVL on Uniswap, we observe that during altcoin season, there is increased liquidity profile for tokens outside the top 50. Okay, that's interesting. So what they're saying is that during altcoin season, liquidity providers provide more liquidity. I mean, this is pretty basic, but it's also something that can be easily overlooked. Hey, Jordan, welcome to the stream. This is something that's easily overlooked. The fact that, there's usually a strong liquidity profile for top 50 tokens. All right, that's fine on Uniswap. But when we start to see liquidity ramping up for tokens outside the top 50, this could be a leading indicator for altcoin season. All right. During bear markets, all right, liquidity is predominantly provided for the top 50 tokens, as this is where the majority of trade volume occurs. Those top 10 tokens are going to be WETH, wrapped Bitcoin, and stablecoins, which we already went over. It accounts for the lion's share of all DEX trading. And by looking at the percentage change in TVL for each token category, we can detect an increase in liquidity provided for the top 10 and top 20 tokens, while liquidity has been removed for tokens ranked 20 to 50. All right. This suggests that the market appetite for long tail assets has not yet picked up meaningfully, telling us that the kind of rabid altcoin season fever hasn't happened yet. Up to 18% of total value locked provided for tokens outside the top 50. All right. This is our indication when we see that liquidity ramp up, and we've seen that now increased liquidity for long tail tokens. All right. More than 10% of TVL provided for tokens outside the top 50, showing that increased appetite. Whereas we can see that not really be the case here in 2022. We can also see that not be the case in early 2020. Throughout most of 2020 and into 2021. All right. It was Bitcoin and Ethereum driven. And then we entered into alt season here. And again, although market trending down, a little bit of course, altcoin season interest here as individuals are starting to pick up altcoins during the decline of the market there. Yeah, here we have, just marking out predominantly liquidity for major tokens, up to 90% of TVL. So this is a very just interesting metric. If we look at the breakdown of TVL here, anytime we see if we just look at the total amount of TVL provided to liquidity pools, all right, on Uniswap, anytime that ratio of liquidity being provided to tokens outside of the top 50 goes above 10%, that is a very early indication of altcoin season. and an indication to start being risk on in the altcoin market. So very interesting. I really like this. This is a level of analysis that I would like to do more of, because I like quant analysis. Another thing that we can do as well is analyze where that liquidity is being provided. Of course, Uniswap allows liquidity providers to specify the range of price where they are providing liquidity, meaning, if they're providing their liquidity, they're only going to service trades. They're only going to be the counterparty for trades within the range that they specify. This is the new Uniswap V3. And what they're saying here is that when we see another metric that we can watch for is an increase in market depth between +5 and -5% of price, right? This is a typical range for liquidity to be provided. Again, you have price, and liquidity is typically going to be within +5 or -5%. This is why, kind of movements outside of that liquidity zone. This is very similar to kind of our main trading strategy here, our day trading strategy on Bitcoin. Liquidity is being provided in a tight range, and when price makes a sharp move outside of those liquidity zones, price wants to move. Price wants to move back in, reversion of the mean. Price wants to revert back into liquidity there. An exception to this is Uni, where market makers have increasingly concentrated liquidity closer to the current price range. This suggests less price volatility is expected for the Uni token, which is not surprising given it is one of the most established and mature tokens. All right, so again, quite complicated dynamics here, but again, just looking at how these liquidity profiles kind of evolve. All right, so for example, here's the liquidity distribution of Uniswap WETH, and you can see that liquidity is very tightly concentrated here in this range. Okay. And so we would expect, anytime, basically, we would expect with this type of profile, if price were to go, say, over here, we would expect it to quickly get bought back up into the range, because that's where liquidity is. There's no real service for prices down here below. Very similarly, if price were to break to the upside here, we would expect it to revert back into the range, because that's where liquidity is being provided. But when we start to see this profile broaden out, when we start to see these numbers go up, that is an indication that liquidity providers are expecting dramatic moves or more volatility, more movements outside of the range. Okay, this is okay. If you guys were watching this live stream looking for some alpha, here it is. Here it is. I know we're going through this kind of long, type thing. We're reading a lot. This is not the most entertaining thing that you guys have probably ever watched in your morning segment, but right here, this is what we did all of this for. So we could come to this conclusion. All right. We talked about liquidity profiles. We talked about the incentives of liquidity providers and how when they start fleshing out the range of where liquidity is being provided relative to current price, it is an indication that they are expecting increased price volatility. All right. We talked about how capital rotates from Bitcoin to Ethereum to altcoins. We talked about all of these cycles. We talked about all of these patterns that we can look for. We talked about all of these leading indicators that we can look for, but this is the biggest one. We now contrast this with the behavior of traders, where we can observe an increase in trading volume on Uniswap since October of 2023, including tokens outside the top 10. Remember, altcoin trading only accounts for 10% of trading volume on DEXs. All right. Now, here is the alpha. All right. We have already pointed out how liquidity providers are starting to provide liquidity to a looser range, meaning that liquidity providers are expecting and anticipating increased price volatility, meaning a big move. Okay. However, trading activity for the top 20 to top 50 token pairs remains unchanged, which reaffirms our previous hypothesis. Here's the alpha. While liquidity provision is moving farther out on the risk curve, trade volume has yet to follow. Has yet to follow being the critical part. Has yet to follow being the critical part. Will follow. Will follow. All right. The liquidity profile is shaping up. All right. For alt season, the altcoin season indicator is firing. Okay. The liquidity profile has started to flesh out, but traders have not yet committed. Okay. Which means that is the next step, because once we cross that threshold, there's no going back, right? You can't put the genie back in the bottle. Can't put the genie back in the bottle. So I believe what I'm inferring from this is that Glassnode is laying out the case that altcoin season is coming and to stay long, right? Which reaffirms with my general hypothesis here, guys. We're in a bull market, stay long. All right. So summary and conclusion from Glassnode here. The market momentum following the new Bitcoin ETFs and the anticipation of a bull market in digital assets is starting to create shifts in capital flows to all altcoins, right? Capital flows into Bitcoin, then Ethereum, and then it flows into altcoins. This is the flywheel. We see it over and over and over again. Glassnode's altcoin indicator suggests a more mature and possibly sustained uptick in altcoin markets. Okay. However, that interest is relatively concentrated in higher market cap assets at this time, meaning that investors are beginning to move out on the risk curve, which is good for altcoin holders. But they're doing so tentatively right now, right? They're moving into the more established projects, Polkadot, Cosmos, Ethereum, Solana. All right. That's where we're seeing the majority of this movement out on the risk curve. All right. But this is the first step. Investors move out there. They see good gains. They rotate capital into more riskier assets. They rotate gains. They rotate capital out into more riskier assets. All right. And this is why we see the flywheel of pumps from majors to major caps to medium caps to low caps. All right. It's the flywheel. Okay. All right. Solana has seen the strongest returns over the last year. However, some movement is starting within the Polkadot and Cosmos ecosystems alike. Now, again, I'm not a big fan of Polkadot, but I'm a huge fan of Cosmos. Cosmos is a big part of my portfolio. All right. Within the Ethereum ecosystem, the staking sector is showing the most consistent capital inflow for its top token, which like astounds me because like you can go get T-bills right now and earn a higher APY than staking your Ethereum. Okay. A resurgence in altcoin trading on Uniswap alongside liquidity and trading volume patterns underscores a cautious yet growing interest in longer tail assets. Longer tail assets are riskier assets. This is initially showing up in change in liquidity provision and an expectation of heightened volatility. This, however, is particularly present within TVL, within the pool, and investor trade volume has yet to follow. I think they kind of messed up on that last sentence, but all they're trying to say is that this is a leading indicator that liquidity provision is ramping out, that we are starting to see the liquidity providers, who are very important to the markets, they are anticipating increased price volatility, but traders have yet to commit and follow along. All right. So this is suggesting that we will be seeing an altcoin season. All right. As always, trade safely, do your own analysis, do your own research. You guys are responsible for your financial decisions, but fantastic information from Glassnode. I really love these deep dives into some of this on-chain data. And this is the type of analysis that if you guys really want to kind of go down the quant road and, you know, do more than just kind of, oh, well, I guess price will go up or go down or whatever, right? This is at the high end of what we do. This is far more quantitative than most of the work that I actually do. Most of mine is just, again, just kind of more sticking strictly to back testing, strategy testing, all of that kind of stuff. But this quantitative on-chain analysis is just absolutely fire. It's so wonderful. It's so wonderful. So shout out to Glassnode for this. And if you guys want to sign up for Glassnode, so you will get a discount if you want to sign up with the link in our links channel in our Discord.